Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. So the original pattern construction that led to the market moving higher in the first place started between mid-March to early May for bullish shift pitchfork, which was breached, then broken on the top side at the start of November. However, the move up faltered quite badly at the end of November and only to be rejuvenated for a fresh move higher, which in turn finished in early December with a pullback, interestingly right back over the last 2 weeks to sit on top of the broken upper tine, currently at 315.05 of that same bullish shift pitchfork, mid-March to early May. I'd now like to discuss the next longer term pattern, and that is the large bright red April to late October this year ascending wedge pattern, currently 264.90 to 274.55. This pattern had been biding its time since late spring until 13 weeks ago, when we saw a significant false break higher, which only resulted in a small double top over September, Adam and Eve type, that ended up being part of another pattern, not so well defined but still there, mid-August to late October head and shoulders pattern, with the previously mentioned double top being the split head of a head and shoulders top. Between 10 and 7 weeks ago, the market breached the neckline, currently at 259.75. It became 7 weeks ago a head and shoulders continuation pattern, rallying to the new highs seen in December. In the process of rising higher, prices 4 weeks ago reached the primary target for the bright red ascending wedge pattern, as well as later that same week the secondary much harder to reach target, and then on top of all that a further target upside, one I hadn't really discussed because it was so far away, but a final target upside up in the 333.55 area. 333.55 area. That's before prices toppled over. That initial big rally nevertheless left one jarring feature, which I spoke about 2 weeks ago, and that was that November has a monthly key reversal up, a high unusual pattern to see at the top of the market. I said 3 weeks ago, and I quote, "I'm going to think about the implications of such an odd combination, a monthly key reversal up, but right at the top of the market. I'm going to think about that for a while," end of quote. Well, my thoughts were put aside for a bit, as prices seem to be traveling now in between the late November high above at 335.45 and the broken upper tine mentioned earlier that is below. We nevertheless still have overhead inversion territory, a 50% projected Fibonacci line at 358.15, but closer to the market, prices have moved sideways and out of the relatively newly drawn late October to late November bullish Andrews pitchfork. As I said last week, and I quote, "This pitchfork is quite acute, so I'd happily consider finishing this to a shallower bullish shift pitchfork or even retiring it completely. Right now, I'd like to retire it completely by the next commentary." So that just leaves us with what will the market do in between a late November high overhead and the broken October low below. London coffee. Earlier this year, a late April to early September, quite large ascending wedge pattern emerged, highlighted in bright red on my daily chart. That's currently 49.91 to 54.32. The lower uptrend had been reinforced and also helped in reinforcing the mauve medium moving average, currently at 47.97. This is despite 2 significant breaks higher and 1 lower, outside the bright red ascending wedge pattern. Now these disrupted the pattern so much that I threatened last time to downgrade this pattern. I have not, I've still got it marked up, but it's purely because I wish you to see it clearly on my daily chart and for no other reason. I want you to be able to visualize it clearly. What has replaced this pattern is something I drew 3 weeks ago, a newer, and by this I mean a dark blue highlighted, shallower bull channel, currently 43.97 to 57.50. It is not ideal as it's quite large, but we do need to have some aspect, if you like, to what this market is doing. The final stretch comes higher 4 weeks ago, and also left a legacy as November became a monthly key reversal up right at the top of the market. I added 3 weeks ago, and I quote, "I'm going to think about the implications of such an odd combination, a monthly key reversal up, but right at the top of the market. I'm going to think about that for a while." End of quote. Well, here are some more thoughts for you to be going on about with and to consider. The dramatic drop last week led to what is arguably an island pattern, if only just, formed at the very recent low. The topside targets, plural, for this pattern have already been achieved, but we also saw the creation of another target, an early November to early December bullish Andrews pitch hook. I've since finessed this into a shallower bullish shift pitch hook for the same move, which is highlighted on my daily chart in purple on my daily chart. Right now, prices are in between the overhead middle time, currently at 52.83, and the lower time below, currently at 46.71. For now, this shallower bullish shift pitch hook is showing the bullish angle of attack of the market, though neither the upper nor lower times have been tested as yet. So I'd add a big question mark, big squiggle at the end of that commentary.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.